station of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner, primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. Hope you all had a fantastic weekend. I was out in Hog Valley near the Ocala National Forest. Quite a fun time. Did some off-roading, mudding, had an airboat. Man, I had never been on an airboat before, surprisingly. And I had a complete blast with that. One of the things that I looked at, and I wasn't really familiar with this project, but it was something called the Cross Florida Barge Canal. I guess this had been suggested, oh man, even during the Spaniards' time here in the 1600s. And then it really, got American attention in the 1800s. There's a lot of piracy around the southern tip of Florida. I guess it never made sense. Well, I would suppose sometime post-war, people just started trying to build it. And it was finally, the kibosh was put on it in the 90s. It's very interesting. They ended up making a dam and a few locking systems. Pretty interesting stuff. I posted those pictures in the den. If you are in there, check them out. It was really cool. I posted a little article as well with the, about the barge canal. I thought it was very fascinating. Kind of a harrowing experience getting into that place, but cool nonetheless. You got to do it while you still can. And I mean that because my back doesn't entirely hurt yet, trying to jump over things. Looking at the SPY right now, up about 1.14% at 569.22. Okay, so I'm waiting to see if we get some volume follow through today. If we're moving up like this on no volume, yeah, I mean, listen, we've been talking with Tim Ord, right, for the past maybe 2 weeks now. We've been looking at, this potential to close on the weekly chart below the Bollinger Band. If that occurs, you get some movement up to the mid-Bollinger Band, and it's going to be, the meaningfulness of the move. It's going to be really dependent on that volume, right? And we look at volume a lot here. Is this a meaningful move? We're gonna wait to see. I mean, this is not a ton of volume, at least today. So we'll see what happens. Of course, you have, really, I think not a lot's going on today. I believe we had the Fed speaking tomorrow. Let's see, looks like the economy is slowing a little bit. Consumers spent at a slower than expected pace in February, though underlying readings indicated that sales still grew at a solid pace despite worries over the slowdown. But yeah, you're still getting growing, just not as tough. I would also say I think a lot of people are tapped out from December and January still. I think a lot of Americans are short on cash. Of course, we've been saying here there is a class of Americans that are obviously spending and spending us through all this. This was the case in 2022, if I remember correctly. So, yeah, what does it say? Retail sales increased 0.2% on the month, better than the 1.2% decline in January, but below the estimate for 0.6% rise. So that is kind of a slowdown. Of course, I don't think we're getting a rate cut tomorrow at all. I know some people are kind of hypothesizing that. I don't think that makes any sense whatsoever, but we do potentially have an event where he says, hey, we might actually be cutting, I think they're pricing in 2 cuts this year. He says, hey, we might add an extra one in if they foresee the economy contracting in such a major way. An interesting online spending helped boost sales number for the month. Non-store retailers reporting a 2.4% increase. Health and personal care showed a 1.7%. Food and beverage outlets saw a 0.4% rise. Bars, restaurants had a 1.5% decrease. Gas stations were off 1% amid falling prices. Sales overall increased 3.1%. The bars and restaurants with a 1.5% decrease. Of course, you need more data, right? You can't just make some profile based on that. But I do think if we continue to see declines in areas that way, I think that really does show that there's a portion of this economy, and a strong one, that, a large one that is a little bit cash strapped right now. Especially when you talk about like millennials and Gen Z, like they don't stop going out for anything. So it'd be interesting to see kind of what happens, and if that trend persists. It's not even a trend. If we get more data points that establish a trend in that realm. So anyway, SPYs are up 1.04%. Again, not a ton of volume right now, so we're going to wait to see what happens with that. You got the composite trading up 0.74% at 17,884. Of course, next week you have Quantum Day with NVIDIA, and believe me, we're going to talk about that. Of course, ARQQ is up. These guys are interesting. They're doing the quantum proof encryption. We're going to do some more research. They say they're NIST compliant, but I'm curious as to what they mean when they say that. So this is up 43.53%. Yeah, a little bit freaky. 269 million market cap. Yeah, we're going to talk about this for sure. Of course, LAES is up on quantum news as well. That's up 13.55%. And let's look at Qubit. This one I really I want to buy puts for March 20th, which is when they're going to have their big kind of investor meeting. Again, we went over this Friday. These guys don't do anything, it seems like right now. And the amount of money that they are going to need to become operational and actually develop chips. But here's what I also think with Qubit, right? Is that they're going to do what they've always done in the past, which is just kind of change what they say they're going to do, right? You know, we're going to do quantum interconnects now. I mean, I think that's where IonQ is kind of positioning themselves in a way, which is kind of funny. And they're leveraging their, quote, quantum networking a lot more. This is IonQ, of course. Of course, you've had a lot of insider sales in IonQ. It's wild. They actually legitimately sold at the bottom, which is kind of funny because we're all the same. That's up 1.64% right now. You've had some exuberance over the past few days. It is kind of waning, at least a little bit today. We'll see what happens. I think I am a little bit, I'm definitely bearish on Qubit. I wouldn't really take anything out on Q, in my opinion. Rigetti I haven't really been looking at, but that's off a little bit. And then, of course, D-Wave as well. There's not a lot in this market right now that I feel like I would make a major move on, right? Even like buying puts. Like I still think we're going to go down personally. Again, a lot of this is dependent, I guess, on what, is said tomorrow during that meeting. But, like, for instance, Tesla, I have at least my leverage positions in here still. You're off 4.6% today. I definitely think this is going to continue to go down, without a doubt. I think things are getting very tough for Tesla. I think their their lack of LiDAR is now becoming a significant issue, where their third parties are testing it and it's not doing well compared to LiDAR from things like Waymo. I still have like a 180, 170 price target for Tesla. Folks, stay right there. I'll be right back with Steve Rhodes.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Of course, we're going to go over to TFNN.com. It is Monday, and you know what that means. That means we are joined by Steve Rhodes. Steve Rhodes is the author of the Mastering Probability newsletter. He is also the host of the Trader's Edge on 11 a.m. Eastern Time. Check out Mastering Probability newsletter by Steve Rhodes. If you've not done so yet, we have a 30-day money-back guarantee. So for whatever reason, if it doesn't work out for you, you can get that money back. I'm betting that it is going to. Steve, how are you doing?
Doing great, Jacob. Yourself today?
I'm doing well, quite refreshed from the weekend and ready to wrap up this trading day and see what happens for the rest of the week.
Yeah. It's interesting markets
Absolutely.
that we're in, and I thought we would start with actually gold. We'll talk a little bit about the equity markets, but the gold charts are kind of interesting. And this chart here, for me, I like to take a look at the daily, weekly, and monthly time frame all at the same time. So it gives us a feel for example, if you're going to break support in one area, or where's the next level of support, and so on. And now here, what I've got is I've got the April contract for the daily and the weekly time frame, but I put the monthly contract on a continuous contract. And the reason is I'm not getting enough data to give us the actual trade signals that we want to take a look at. So we take a look at the monthly time frame. We're at new all-time highs today in terms of U.S. dollars. So we're very close to it. Maybe we didn't. We're not at a new all-time high today. The new all-time high today was on Friday. On a monthly basis, we are in bar number 9 of a TD9 count. What bar number 9 represents, it's like running a 100-yard dash. You use up all that energy,
right,
to get to the finish line. And once you're at the finish line, it's not like you've got a lot of gas left. Well, that's what a TD9 count pattern is doing. And when we get to that level where we get to bar number 8, 9, or the bar following 9, that's when, in essence, the market can run out of gas. We are in bar number 9 on a monthly time frame. Now, that says at the top, if a top is going to form with this pattern, would form either this month, the month of March, or the month of April. So that one we don't know. The weekly time frame chart, though, may be the chart that provides us with that piece of information. And what I mean by that is last week was the completion of a TD9 count top for gold, and that was the bar following bar number 9. Now, that makes that high, which was 30.70.10, a very key high. Now, not on a daily basis. So, for example, if we go above that today or tomorrow or Thursday, but close back below that level on Friday, the weekly TD9 count top will still exist. So this is really a Friday number. It's important for people who do trade gold or want to understand what the signals are being generated, and is 30.71.10. If we close above that on Friday, what it tells us about is a strong upward momentum move and expect higher prices out there. To a certain extent, Jacob, that's what the daily chart communicated to us on Friday.
Sure.
On Friday, price went ahead and closed a new all-time high. Thursday, we negated Rhodes momentum indicator topping signals. We've got no topping pattern that's in place for the daily time frame. There is a Rhodes momentum indicator signal line. That's the black diagonal lines. They just are caution signals. In order to trigger a top for that pattern, you need a bearish reversal candle. Likewise, if they were at the bottom, we would need a bullish reversal candle. So if we summarize gold, we have no top on the daily time frame. We do on the weekly. That makes 30.71. 110, the key level to be watching, because if that top stays in place out here, what should take place, we should see price pull back to test support. That would either be about 29.45 or 29.74. Even if we don't get a daily topping signal, that would be the likely outcome. And on a monthly basis, says that we should be cautious. Any questions, Jacob, about these charts or anything that I've shared thus far?
No, not thus far.
Here's the daily GDX. So if I'm having some technical system issues here, so I wasn't able to get this done. But I can share with folks, and we've done this in the past, those people who listen to the Trader's Edge show, there's a very strong directional correlation between the way that gold trades and the GDX. Makes a lot of sense. That's why this entire area says, hey, caution Will Robinson. If we look at the daily GDX, unlike gold, the daily GDX is going to form bar number 9 of a TD9 count pattern today. It'll complete that pattern tomorrow. That suggests that price should pull back to support. In the case of the GDX, 42.76, 42.57 would be likely price targets to the downside. The weekly time frame is going to go ahead and complete a TD9 count top this week. So on Friday, we'll have a confirmed TD9 count sell signal. And on the monthly time frame doesn't know what in the heck we're talking about. If it closes the month, which it's only the, by the way, happy St. Patrick's Day.
Yes, happy St. Patrick's Day.
I do have my green on, light green, albeit. But we're taking a look at a green bar on the monthly time frame chart for the GDX. And if we were to close the month at above 44.22, it would negate its sell the D point top. Now, we got a lot of time in the month, so it's time really to be watching the daily and the weekly, because price could easily pull back below 44.22. But this is a signal to be very cautious right now. I've seen some posts inside the Tiger's Den, and I realize that some of the individual components that make up the GDX don't have TD9 count tops. I'm just saying, just be cautious overall, based on the signals that we're getting for both gold and the GDX.
Okay.
Jacob, any questions here about the GDX?
Not so far, no.
Perfect. Now, here's gold. It made new all-time highs on Friday. It made new all-time highs in terms of U.S. dollars, in terms of Canadian loonie, in terms of the Chinese yuan and Australian dollars. It did not make a new all-time high, not even close in terms of euros, not so close in terms of yen, not so close in terms of pounds out there. What does that say? That says caution. So here's another caution sign. We're not making new all-time highs in all of the major currencies, just a few of them, important currencies nonetheless, but we are not making new all-time highs across the board. So again, another concern, just another caution sign out there. If I take a look at gold priced in all of the Middle Eastern currencies, this is kind of wild, because we're at new all-time highs today in terms of, well, first on Friday last week, new all-time highs in every major Middle Eastern currency. We're talking the Jordanian dinar, the Egyptian pound, the Kuwaiti, the Saudi rial, the Syrian pound, the Iraqi dinar, the Israeli shekel, the Iranian rial. Well, today we're at a new all-time high in terms of gold priced in Iranian rial and Syrian pounds out there.
Okay.
And I think that's a signal that there's a fire going on over in the Middle East.
Yes,
some, I know they're talking about peace treaties, this and that, or what have you, but this is saying fear. We didn't see there's not really fear. When I say fear, we're not making new all-time highs in euros or in pounds out there. We sort of should be, but consistently doing it here in the Middle East seems like the powder keg is still alive and well out there.
Well, even with Yemen, right? I mean, I think we targeted some Houthi rebel bases. In Iran, I guess Trump said that they're going to be on the hook for further, incursions by the Houthi, which will be very fascinating. I could see this kind of causing this a little bit, maybe.
Well, that's really kind of the signal. Markets know something usually ahead of time.
Sure.
Why are we at new all-time highs in every Middle Eastern currency, basically?
Fantastic point. No, seriously.
To me, it's so what would negate those TD9 counts and everything that we looked at? It would be the powder keg, I would have to say, in the Middle East out there. And real quickly, before we go to a break, last week when we were on, we were talking about the contango that existed inside the VIX futures contracts.
Yes.
We are out of contango now. But this shows here, these green bars, this shows when we get out of contango, they typically form pretty significant bottoms.
Fantastic.
So this may be more than just a 2-day rally.
Well, Steve, please stay right there if you can.
Okay, sure.
Folks, we'll be right back with Steve Rhodes.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. I'm joined right now by Steve Rhodes. Steve is the author of the Mastering Probability newsletter. Go over to TFNN.com, click the newsletters tab, and check it out. Steve, before we went to the break, of course, we were talking about gold making all-time highs in Middle Eastern currency, very interesting. And then I guess the VIX is moving out of what's being called the contango last Friday.
Yeah. Yeah. Well, one quick correction here: 3017.10, not 3071.10. A little dyslexic, wrote down the figure wrong. So 3017.10 is the number to be watching on gold. And yeah, so this chart here, the panel, Jacob, on the left-hand side is taking a look at the 3-month VIX. The center is the 6-month. The one on the left happens to be the yearly VIX, and the center is a 3-month VIX. The one on the right is a 6-month VIX. And when that gets above the ratio of 1, which I've got drawn in there on those yellow and green lines out there, that's when we're getting in contango. And what you'll see is kind of a unique feature here. When we come out of that, that's when, and that means it closed back below 1. That would really mean that in this case here, the March contract is trading below the November contract from a price standpoint. And here you can see that oftentimes it's a signal of a pretty significant bottom. So that's why I'm saying this might be more than a 2-day rally that we are looking at. If I look at what also transpired on Friday, oftentimes we talk about the spot VIX having a 1-day rate of change above plus 10%. That happens more often than a 1-day rate of change below minus 10%. On this chart here, the top panel is the S&P 500, and those green arrows identify days where we have those 1-day rates of change below minus 10%. And what you'll see is, especially when they happen after a pullback, is it's a signal of an initiation to higher price. Higher price to where? Well, that's when we have to start taking a look at the other patterns and things that are going on inside the ES mini and so forth. But that's a signal that price should move higher. And then when you put that together with the spot VIX, the spot VIX is shown on this right-hand chart out here. And here we can see we're trading below yesterday's or Friday's low out there. So that's a bearish signal with regard to price. Okay. And its price target should be its 50-day exponential moving average. Now, that printed out at about 1942, about a half an hour ago. Maybe it's up or down by a penny, I don't know. But that's really the price target, the 50-day exponential moving average. And I think it's likely that we're going to get there. That price is going to move down to that level. And the reason I believe that is when we look at the New York Stock Exchange formed a TD9 count bottom pattern last week. We were talking about the TD9 count tops for gold, the GDX, and so forth. Here we had a nice TD9 count bottom pattern that formed on Thursday, completed on Friday, is having follow through today, and prices trading above that oscillator unchanged line. And that's at 19,397. And giving that up tells us that prices lost momentum to the downside. I really didn't expect. I really was expecting and anticipating that all of the indices, Jacob, that the rally where we would find resistance would have been at the oscillator and change line. Okay. And that was the time to then go back in short. But that's not the signal that we're getting. We take a look at the New York Stock Exchange. And if we take a look at the advanced decline oscillator, that's on the bottom panel, bottom left panel out there. That's the difference between the 39 and 19 period exponential moving average of the advanced decline line. Well, it was in the oversold condition. I don't recall if it was there when we spoke last Monday, but it certainly was. How did I do that? It certainly was. It certainly was an oversold condition on Friday of last week, and a couple other days, Wednesday, and certainly on Wednesday as well. That condition now has worked itself off, and the advanced decline oscillator is above the zero threshold level. You'll see the print on my screen says 48.22. Now, just closing above zero doesn't mean that buyers are the ones that now are in control. If we do get 2 consecutive closes above that, that's what that would signal to you and I. So with this set of charts here is suggesting that we should get a further move higher, and the spot VIX should target its 50-day exponential moving average. Any questions there?
No. So, well, actually, I do. So tomorrow, if we close below that level, it then could suggest that this move to the upside is a little bit, as you were kind of saying earlier, might be a bit more permanent than just a few-day rally.
Yeah, if we close below the 50-day exponential moving average, whatever it's printing at right now, it's 1942. That would be a bullish message. Okay. That would suggest for the VIX that it would pull back to where it had broken out from at 1512. But any close below the 50-day exponential moving average, the S&P 500 New York Stock Exchange should move sideways to higher out there. Okay. So that's what but that would be the target. Those people that have a hankering to be on the bearish side, that's what I would be watching is the spot VIX and how it deals with that 50-day exponential moving average out there. Now, there's something else that I want to share with folks, and it's really about this evening. This is the 5-hour time frame charts for all 4 equity future contracts. What you'll notice is they're all in sync. Now, when I say they're all in sync, what I mean by that is you will see that each of them have already completed bar number 7. And bar number 8, which is the bar that we're in right now, is above bar number 7. When TD9 count tops happen, the highs needs to be on bar 8, bar 9, or the bar following bar number 9. So we still need that 9th bar to complete. This is going to complete. Bar number 8 is going to complete at 5. Bar number 9 is going to complete at 11 o'clock in the morning. And then at 4 a.m., after I think as Europe is coming online in full blown out there, we're going to have TD9 count. We are likely going to have TD9 count tops for the 5-hour time frame for all 4 equity future contracts. So a top is likely to form. It's a wide berth, but it's going to be between 5 o'clock tonight and 4 o'clock in the morning out there because of these 5-hour bars being closed. That's really going to be our first real critical test out there because it's for a longer term time frame, a 5-hour time frame. We should see price pull back to support. We'll wait until right now. I can tell you support on the ES would be about 56.48, the NQ 19.742, the Dow 41.780, 90, and the Russell 2000 all the way down to 2027 out there. But these may not actually take hold until 4 or 5 o'clock in the morning out there. So I believe that tomorrow we're going to see our first test and understand now where does price just pull back and test support? And then we take off, and if we do, then we're headed to a much higher ground out there. Yeah, there's also A to B equals CD patterns that are present. For example, on the ES Mini, I'll just draw it in here. That's the A to B line out there. And if I just move this over to the low that transpired after that, that's going to give us a price objective that's very close to where on the ES Mini the price broke down from. That's what that green horizontal line, that's your TD9 count breakdown resistance level. So it looks to Stevie like price is going to go target the 57.48 and in doing so form TD9 count tops.
Okay. How about that? Fantastic. Yeah, we'll definitely be. And so you're covering this as well in Mastering Probability, right? Or,
absolutely. Yep. Absolutely. Yep.
So, I mean, this is like
all this stuff.
Yeah, this is the time to 100% get in here. Steve, fantastic.
We don't just take one thing. We don't just make our decisions based on one thing. We try to put it together, just like I was putting it together in pieces for you out there. So, but tonight, I would expect that tomorrow we're gonna the early morning hours. We're gonna find out just how strong this market is, this rally is.
Well, Steve, I'll definitely be reading Mastering Probability newsletter tomorrow morning. Thank you so much for coming on, great. Steve. We'll see you tomorrow at 11. Okay?
My pleasure. Take care and have a great day.
You too, Steve. Folks, Mastering Probability newsletter. Check it out. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. We were just joined by Steve Rhodes. Again, check out Mastering Probability newsletter. I know we have a lot of new listeners. Listen, and I know sometimes it can be kind of weird buying things online. I totally get that. I grew up on the internet. And I am cautious as well. I want to say we do have a 30-day money-back guarantee for all first-time subscribers. So if you want to check this out, you can do so risk-free. If for whatever reason it doesn't work out, you're going to email me at jacob@tfnn.com. We'll get you all taken care of. You'll get your money back. No problem at all. All right, let's move on here just a little bit. Okay, we're still up roughly 1%, okay? Does it seem like the volume is resolving too heavily on the upside? Again, I think there's some kind of pause before we hear what the Fed has to say. Composite up 0.72, Dow Jones Industrial up 1.1, Russell up 1.31, DXY off about 0.31%, crude oil coming up a little bit. Again, when we were talking with Steve, looking at gold making all-time highs in Middle Eastern currencies, right? Could be suggesting, it's funny saying, maintained kind of tension or volatility over there because there always is, right? But, I guess our military did attack some Houthi targets. If I remember correctly, my, memory of geopolitics serves me well, is that most of Yemen is controlled by what we call the Houthi rebels. And they have been making they've been targeting some of our guys and have been targeting shipping as well. So I believe Trump bombed them this weekend. Again, I was out of town in the woods, but if I remember correctly from the headline that I saw when I got back, that's what happened. And then Trump said that Iran is on the hook. It's very interesting how all this stuff works, right? Even for instance, in Bahrain, right? This is like a major, I say ally of the U.S., but it's because we have a lot of naval bases there. But that family is what we back, and most of the people there are not of that same kind of belief, and they are funded by Iran. This happens all throughout the Middle East, right? Iran is a regional power, and so it's interesting seeing Trump put more pressure on Iran. He has always been somewhat antagonistic towards that state. I mean, of course, we have as well as a nation, but very interesting nonetheless. So you have gold contract trading up 0.19% at $3,006.90. You have copper trading up 1.67% at $5.97. Still march upwards. Looks like we're probably going to hit $5 on that contract. And then silver trading up 0.14% at $34.38. Okay, I mean, at least with the 10-year, you're getting some stabilization in price. Again, I think we really have to wait to see. I don't think the market is necessarily sold heavily that we're going to have rates come down to the levels I think Trump wants them to. Are we going to get zero interest rates again? Probably not. Maybe ever, unless we have like a massive crash. I think the market's still not sold. I think we still run into issues with these tariffs that come into April. And again, this is not me speaking politically whatsoever. I would love to see this, work and bring back U.S. manufacturing. I'm an America bro. I like this country, and I want to see it win. But I get concerned in the near term, there can be a lot of pain, right? So we spoke about maybe a month ago or 2 months ago about this historic kind of, lumber duty war that we've had with Canada for quite a while, and it seems like that will heat up a little bit. Again, if to kind of summarize everything, the Canadians, they subsidize their stumpage fees. We do not do that in the U.S., and so we do countervailing duties on them. Seems like we're going to increase that. That can cause issues, definitely with building new homes. It seems, I really do believe we need to be building more homes to get these kind of prices down. Really, you think about it for the younger generation, like we're not going to get homes anytime soon. It's very tough. And people say, well, move out of the cities, go find somewhere cheaper. It's like, well, the jobs aren't there, right? And we had something, I guess, with online work, but that does go away at some point, or it seems at least there's an effort to make it go away. So, there's some, it's a very difficult kind of situation, I would say. Apple up 0.73%. Still not very, feel any way towards that. And I feel like everything right now, and I said at the beginning of the show, I don't see anything, and maybe it's because I need too much confirmation to get into stuff sometimes, but I don't see anything that seems exceedingly great. I know hedge funds put a bunch of money in last week, but I almost think this is going to make retail hold the bag. We've been speaking about Euro stocks before they really got ramped into, even China stocks before they really got. We're looking at BABA at like $82. Like, hey, this seems interesting, but that's almost seems kind of saturated now. Think about this, at least with European stocks. I think Eurostat is still somewhat interesting. That's ETCMY. That's the ADR for it. You're up 7.98% in that. These guys, again, are doing the low Earth orbit constellation for what is dubbed the European Starlink. But say that the Russo-Ukrainian war does end, right? And we all hope it does, no doubt at all. Even with the Europeans continuing to build out, these defense stocks still get at least a momentary hit. They stop becoming attractive because that pressure kind of goes away. Now, I would still argue the pressure does exist, that the Europeans need to go through rearmament, and I believe that they will. But this adds volatility into the market. I do hope that war ends entirely, but it's something to keep in mind. And you have so many people now, like the cat's out of the bag almost. And I don't like doing stuff in the market when the cat's out of the bag on certain things. That's what makes me even a little bit nervous with Tesla, even though I do strongly believe this equity has much more to go down. Everyone's already talking about it now, right? Everyone's like, oh, constantly short Tesla, keep shorting Tesla, keep da-da-da. For whatever reason, I don't know if I was born this way or whatever it might be, but I just don't like, it adds too much, too many people, too many cooks spoil the pot almost. And that's not, I guess, a hard analysis, but that factors in, I guess, how do I think about things in a biased way. So this leads me to saying, European stocks already looked at, right? Now you have and I use some people I know in my real life as a barometer, right? When they start messaging me about things and my opinions on them, I'm like, geez, this guy now knows that European stocks everyone's looking at them, right? So at some certain point that just makes me say, hey, I don't know, are these things saturated right now? Another thing I'll say too, with what's going on, at least with China, yes, they're getting a massive stimulus pumping in. We're going to see, you have, I think QFIN did pretty well on earnings. We have TIGR coming out. I believe XPeng is tomorrow. That's XPEV. These things have had a major rally since the beginning of the year, right? And what I'll say is if there's anything that does improve in the American economy, I don't believe that this liquidity stays in China, right? I think for a while there was kind of a mispricing, especially with things like BABA or BYD, right? But there is still that kind of, country risk that exists with China. It's just the idea that parking liquidity in American equities, it's such an uncertain environment. And at least, with China, okay, we know they maybe don't run things the way that we like, but they're going to dump money in it. If that goes away and American equities become attractive again, I think this gets a massive liquidity suck out of it from Chinese equities at least. So it makes me feel like, why even get in now? The things run from $9.50, to $24 by the beginning of this year. It's crazy. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hey, welcome back, everybody. Jacob Shoup, Tom O'Brien Show. Sanel in the Den. It's like, hi, Jacob. Wouldn't these tariffs be good for small caps, IWM? What I think would be good for small caps is, like, what are the tariffs trying to do, right? And I've spoken about this, I think, probably a lot at this point, ever since COVID. But it's this idea of reshoring supply chains. And you saw during COVID a major problem, which was, we're not really manufacturing anything here. Obviously, there's specialized stuff we manufacture, of course, cars or whatever, but that gets offshored as well, maybe Mexico, obviously. And I think that, and again, not political, but I think Trump is kind of right on that. You run major risks when your supply chains are scattered over everywhere, right? And you saw with Russia invading Ukraine and to a lesser extent, everything going on in Israel, really more so the Russia-Ukraine thing, but that, we're not at, what people dub the end of history, right? Like, time goes on, it's not going to be Pax Americana till kingdom come. And I think there is a wisdom in saying, hey, we need to bring back some of this manufacturing to the U.S. I'm not necessarily opposed to that in principle at all. Of course, it definitely shakes things up and adds volatility and all that kind of stuff. So, I think in some ways, if that is reshored, like, that will be positive for some small caps for sure. Of course, if you're putting tariffs on inputs, I mean, that can, be negative for, any company, let alone small caps and stuff. Kind of along those lines, this is not a small cap, this is in the SP 500, but, Rockwell, when I'm talking like, factories and robotics and building all this stuff, I'm liking Rockwell more and more. You had Intel come out. The guy said, oh man, I wish we had more time. He said he's going to start focusing more on getting these chips into automation. I think robotics, they might be trying to build this up as something new. Rockwell's kind of well situated in some capacity. Thank you so much for joining me, folks. We'll see you tomorrow morning, 9 a.m. for the morning market kickoff. Take care.